Hello, my name is Warren Davison and I'll be taking you through the PSG Wealth Offshore Fund Update for June. Global equities advanced in Q2, supported by accelerating rollout of the COVID-19 vaccines. Growth stocks outperformed the more lowly valued parts of the market, whilst commodities gained, with energy again the strongest component. The second quarter was strong for US equities, and indeed the S&P 500 reached a new all-time high in late June. The Federal Reserve's rate-setting meeting brought no change to policy, but its projections indicated that interest rates rise could come in 2023. It seemed that this wrongly footed some market participants, though subsequent comments by the Fed officials sought to allay any worries over tightening monetary policy too quickly. Overall, the economic picture remained healthy. US Treasury yields declined over the quarter, with the 10-year falling from 1.74% to 1.47%, retracing some of the large moves higher in Q1. The broad backdrop was a continued pronounced rebound in economic recovery, with annualized inflation rates rising well above target to levels not seen in over a decade. Corporate bonds outperformed their government counterparts over the month. Looking at the PSG Wealth Global Fund of Fund assets under management, we can see on a month-by-month basis the growth in each month. Further support was seen for the solutions, with the AUM ending the month at $2.387 billion. Looking at the peer group rankings, these remain strong across the board, with the longer-term numbers still producing favorable results. 4 of our 6 fund of funds produced average and above performance over their recommended holding period, illustrated by the black rectangles. Looking at some of the shorter-term highlights. Over the 3 months, equity markets saw a rebound, with growth leading the way. Our more aggressive managers performed well as these risk-on assets rallied. For the PSG risk radar, 4 funds appeared on the radar this month. 91 Global Multi-Asset Income remains on the radar as its defensive nature has caused it to lag against the benchmark. 91 Strategic Managed within our Global Moderate saw allocations to cash and alternatives detract slightly from performance, whilst MFS Meridian Global Total Return maintains a static 60-40 allocation. However, the equity portion detracted on a relative sector allocation. For the Global Flexible, we have MFS Meridian Prudent Capital. The fund's defensive asset allocation, in particular the position in cash equivalents, and short-term US Treasuries, detracted from relative performance. The fund also had an underweight position and stock selection issues in financials, which detracted. Looking at the individual fund performance. For the Global Preserver, the fund matched the performance of the benchmark at 2.31%, however remains above over the holding period and since inception. As we can see at the relative rankings, the shorter term numbers have encountered some pressure, however the longer term numbers still remain favorable. Having a look at the Global Moderate, the fund slightly detracted from performance over the 3-month period against the custom moderate allocation by 16 basis points. Over the longer-term holding period and since inception, the fund, however, does remain above that custom benchmark. Looking at the relative rankings, we can see that the fund maintains a position within the second and third quartile. However, overall, the fund is ranked 70% of the time in the upper half on a 5-year rolling basis since inception. Having a look at the Global Flexible. The Global Flexible had a strong month and produced a positive absolute return and excess return relative to the peer group. For the 3-month period, we can see an excess return of 1.96 relative to the Morningstar USD Flexible allocation. Over the longer term holding period of 7 years and since inception, we can see that the fund still maintains a strong excess return. Overall, the fund has outperformed the sector 100% of the time and maintains that perfect track record. Currently, the fund is ranked 7th for the USD class and 5th for the pound class over the 7-year holding period. Having a look at the Global Creator. For the 3-month period, the fund had a stellar absolute return, producing 9.34%. This worked out to a 2.63% alpha over the period. Over the longer term 7-year holding period and since inception, the fund remains well positioned above the Morningstar Global Large Cap Blend Equity, producing excess return. Having a look at the relative rankings, here we can see over the longer term, the fund still maintains its position in the first quartile relative to peers. Overall, what we can see is multi-management is achieving their 3-pillar approach of consistent above-average performance at below-average risk at a competitive fee. Thank you. Please take note of the following disclaimer, and if you have any questions, please do reach out to us.